Investors looking into the litigation finance market these days will see an embarrassment of wealth when compared to just a couple of years ago. In the past, the options for investing in litigation finance were severely limited to just a couple of portfolio funds. Today, the world is different. Investors in the industry have at least 4 options to invest in the space. Invest in a litigation finance-related stock. Investing in a stock in a large liquid market is a fantastic option for investors who value liquidity and the transparency that comes with being publicly traded. This being said, the problem is that the best-known litigation finance stocks are not listed on the U.S. stock exchange. Executives at these companies are fast to point out that many of their stockholders are U.S. investors operating through the pink sheets or through their broker and buying in the foreign market. While this has the potential to be true, investing outside the U.S. still creates some problems for U.S. investors. As Brexit has just recently illustrated, there are many risks a U.S. investor may not be as aware of. In addition, investors who are one stockholder out of thousands or millions, have no ability to interact with the firm or get any sort of preferential treatment regarding fees. None of this is to say that investing in stocks associated with litigation finance is not a good option. Invest in a litigation finance fund. This is the usual approach that litigation financiers take, but it can be hard to find a fund that meets the need of the investor. There are many of litigation finance funds ranging from mainstream large firms to specialized boutique firms, and startups. Picking the right fund can be challenging. Different fund structures will have different levels of risk and return depending on the type of case they target. While it is generally safer to go with an established fund, investors can usually gain more favorable terms from a startup. Invest via a litigation finance platform. There are a few litigation finance platforms that investors are able to take advantage of, such as Yield Street. These platforms provide investors with an online interface to deploy cash. Invest in litigation finance matters directly. For investors with a large amount of cash, investing directly can offer a degree of control and opportunity that is unavailable in other mechanisms. But it also creates substantially more work for the investor.